Economist here. Thought I'd come out and talk a little bit about this idea that Trump is going to push the Federal Reserve into lowering interest rates. And now something that I think is kind of interesting about this idea is that he's talked so much about it that if the Federal Reserve was to lower interest rates, everybody would believe it was because it's because Trump had bullied the Federal Reserve to do it. Like, it was like if they didn't do it or else, or something of that kind of nature. And really, the Federal Reserve has already promised that there would be future interest rate cuts, just not as many as that we had all come to expect or think that was coming due to the dot plot map and the forward guidance job owning for, signaling, of course, credible threats, how I like to call it. But this is ultimately what has taken place right now, is that Donald Trump is using this idea, this credible threat, that he wants the Federal Reserve to lower interest rates and that he will force or demand or somehow make this happen, even changing the way that it's conducted in order for him to have some sort of say in the way that monetary policy is being handled. And really, when I think about it, if the Federal Reserve was to fall in line with what he is demanding, people would say that it's because he said it. But yet it could be just because that was the direction they were going anyway. And so he might use that as part of the ability to enhance the credible threat. By saying the Fed is listening to me, they know what they are doing when I am talking, like they are falling in line with exactly what it is that I am telling them to do. And they could be like, dude, we're really giving you the finger the whole time. It's just like we're doing what we want as the Federal Reserve, acting independently as they always have. And so this very well could be a very good, credible threat that Donald Trump could use in order to enhance his, policies or whatever it is that he's attempting to do out there. I still have yet to figure this part out. Because credible threats and actual actions are very different from one another. So when I think about like lowering interest rates and what that could actually do going into the future, I think about like, well, what happened when we lowered interest rates already? The Federal Reserve dropped interest rates of 1 percentage point and everything went up. Like all the interest rates went up. So to think like the Federal Reserve lowering short-term interest rates is going to have anything to do with the long-term interest rates is somewhat naive to believe. I mean, if you look at it in any realistic form that's taken place here just recently, when the Federal Reserve lowers interest rates, that's a bad sign. It's not good. And since a lot of people take the information that lowering interest rates is somehow good, it's during a bad time in the economy. So it's relinquishing the idea that there is a bad economy taking place. When that happens, people tend to position themselves more in a very defensive mode, which means that I want more of a return. So if you want me to lend you money, I'm going to have to ask for a higher interest rate because it's obvious there's something going on if the Federal Reserve is lowering rates. See, this is the reality of the situation. Most people take it too short term. The Federal Reserve is in control of all these interest rates, all the banking system, all this stuff. That's not true. The Federal Reserve is in charge of short-term interest rates, which has a big impact when it comes to the banking system, and then how it is that then loans start to starts to be created after that. But when we perceive this idea that there is short-term interest rates are going to immediately reflect the long-term interest rate in the housing market, this is not the way it goes down, and it's obvious now. So when I try to explain what it is that's taken place within the economy and how it is that the Federal Reserve is using the monetary policy of forward guidance, this is exactly it. If you look at the words that they are using and how people are reacting to it, this will then give you the ability to understand a lot more of what's happening within the economy. When there was so much forward guidance at the end of 2023, the idea of cutting interest rates has the ability to lower interest rates. The actual interest rate adjustment has less to do with it. And you can see the profound impact that a forward guidance giving, signaling, job owning, credible threat that took place at the end of 2023 when everybody believed that there was going to be a whole bunch of interest rates cuts coming into 2024, how that actually lowered the interest rates. I've been trying to explain this for a very long time. And it's not easy to see it this way since there's nobody else having a conversation like this, talking about how the interest rate adjustment has less of an impact on the economy, but their words have a profound impact. People begin to behave in a way as if it's already happened. So when we see the actual interest rate adjustment take place, people start scratching their heads wondering why it is that it's happening this way when everybody was convinced that it would move in a different direction. When that actual belief is what was lowering the rates to begin with. All right? See, I don't know how many times I've been reading articles out there how people are talking about how the Federal Reserve is bumbling around, don't know what they're doing, can't get a hold of inflation, all this other stuff out there. And I'm thinking, well, if you have read their long-term policy strategy that Jerome Powell had very well described in August of 2020, you would see just plain as day that they are going for an average inflation rate over time, and they seek to have inflation moderately above 2% to make up for the fact that they failed to achieve the 2% target over the previous 10 years. It was so obvious this is exactly where they wanted the monetary policy, the banking system, everything to be. Unemployment that, although it has increased, is still historically low. Inflation has come down to what it is that they were attempting to achieve, which is that moderately above 2% for some time. When you think about what it is that they were looking for within the monetary system in the economy, this is exactly it. So what I think about, like, when Donald Trump is demanding that they cut interest rates immediately, and I'm thinking, do you realize that they have this 5-year-long strategy that Jerome Powell had very well described back in 2020? Michelle Bowman just recently reiterated some of those words in a speech that she gave just a few months ago. So there's no reason to believe that this has changed until they actually come out with the new statement on monetary policy and in strategies, which is coming out later this year. And we may find out that they are going to change the way that they are going to look at inflation. It may not be moderately above 2% for some time. It very well could change, but at this exact moment, it is moderately above 2% for some time, and that's exactly what they are achieving. So to think that they are going to lower interest rates because Donald Trump is demanding it, I find that very naive to believe. If they lower interest rates, it's because they're trying to align with their strategy. Donald Trump doesn't have the influence over the Federal Reserve in any way, shape, or form other than the ability to pick particular people within the Federal Reserve. Those people get to sit in that office for so long that it'll span multiple administrations. And once they have those seats, it's not like you can kick them out. You can't just say, hey, you got to go, man. I don't like you anymore. It doesn't work like that. In fact, it's set up to prevent that from exactly happening. So it's not going to. Donald Trump picked Jerome Powell for a particular reason. It's because those guys are buddies and they know that the yelling and screaming and all the crap about trying to fire Jerome Powell will make little to no impact on the economy, on the monetary policy, on anything out there. Jerome Powell does not make decisions on monetary policy outside of his vote on the FOMC, which has 11 other people who are voting. All right? He is a spokesperson. He literally is the messenger. And by killing the messenger, you change nothing about the message. It stays the same. So to understand that point about firing Jerome Powell making very little difference on the monetary policy or any decision that is made out there is very important to understand. reading the speeches coming from the FOMC, coming from the people who are in charge of monetary policy. Reading what they have to say will give you a much better understanding of what it is that is going to come to the future of banking, finance, interest rates. When you follow the Uneducated Economist, when you go and you become a member of the channel, you will have access to videos that are member-only videos where we have broken down those speeches in a way that you can understand. You will get the monetary policy. You will understand the credible threat theory. You will understand more about monetary policy and what's going on than any newspaper, any propagandized information that you're going to find out there, and the regurgitation of that exact same information amongst all the rest of the YouTubers. The information that I provide is unique to here. That's it. There's nowhere else it's being shared. I don't know why. I wish it was. I wish more people would theorize on this stuff, because I know there's people out there who can do research that's far better than me. I barely graduated high school. I don't have degrees. I never worked in finance. I didn't, I'm not some famous banker, stockbroker, investor, or something of that nature. I'm a guy who figured this stuff out by sitting in a 99 Ford Explorer, scrolling through speeches, having conversations with people, and breaking this stuff down to the point that I've now figured out a way of describing monetary policy that is not only the most accurate on YouTube, but the most accurate that you're going to find anywhere else out there, unless you're talking to another central banker. Everybody who thinks that the Federal Reserve is screwing up and don't know what they're doing doesn't understand there's a 20-year-long plan taking place. Better than 20 years. I just take it back 20 years because I start with the Ben Bernanke speech from 20 years ago. That is describing the events that we were experiencing even today. It led up to this exact thing. So to think that Donald Trump or Biden had a reason, or even George Bush or any of them, none of that stuff, right? None of that stuff makes any sense when you start looking back and you start reading through these speeches and you start you start understanding and internalizing the credible threat theory, and you start leading all the way up to these events. None of this stuff is surprising at all. At all. Okay. And so if you want to know how it is that this credible threat theory is going to impact your life, you have to internalize the information in a way that is then, in a way that you can then say it yourself. If you can use the words and come out and describe the credible threat theory and how it is that it's impacting the economy, you have internalized it. You will be making decisions on your own without even thinking about it. Subconsciously, you will know it. You will just do it. It'll just flow. I look out there and I see a lot of people who have just very, like either hatred or just obscene belief, right? One of the two, on how it is that there is going to be some sort of external out there that can come in and make your world magical or hell, right? And I look at that and I'm thinking, yeah, that's the slave. That's the slave mentality right there. Believing that this is the person that can save it or make it worse, right? It doesn't matter. That person is not the person who's in charge of you. You are. And understanding this stuff for yourself and then letting go of the external. Letting go of this person saying, hey, he's gonna make it all better and all awesome and everything's gonna be cool because of it. Yeah, okay, right, man, go do it, man. I hope you have an awesome job. Meanwhile, I'm figuring this stuff out for myself because there's a much bigger plan that I have that's way beyond anything that you can do. It's sad. It's sad to think of the condition that we are now in this country, in which that a good job sucks. It doesn't work. You have to do so much. You have to do so much more if you want to have a house, if you want to have the retirement, you want to have a decent vacations, you want to have all that stuff in your life. It's not something that is now easily accessible through a regular job. And there's nothing that anybody can do to try and bring that back. I don't care how hard you try to bring manufacturing back to this nation, you will never be you'll never be able to compete against some dude who's sleeping on the ground. That's it. I don't care how many subsidies, I don't care how many tariffs, I don't care what you do, you will never be as competitive. Once you have raised your standard of living, that's it, you're done. You will have to ever strain, ever that much harder, work that much harder in order to maintain that, right? I mean, I think about how much effort I have to go through in order to have the things that I have in my life, and it's like, it's overwhelming at times, it feels. And then I look out there and I think, well, you know, I don't know what else I'm going to do. I mean, it was just like, I could wish and hope and dream and pray that it's going to be different from this, but it's not. This is what it takes. All right, let's read some comments here. I'm kind of going off. I didn't mean to. I guess I had too much coffee today. All right. Let me back it up here to, this is a very dark stream. It is very dark. The only way to win is not to play. Nope, I disagree. I think it's to play the game better than everybody else is playing the game. Right? Like, I don't know how many times I have even read on this channel, people are like, down with capitalism. Capitalism is BS. This is the, the end results of capital. Like, blah, blah, blah. And I'm thinking, okay, well, meanwhile, I'm loading up on stocks. I'm loading up on, trying to get into real estate. I'm doing the things that a capitalist would do because they deploy their capital into something that hopefully would have a return. Now, you can sit around and wish and hope and dream that it's going to happen in a different fashion. I'm willing to take part in capitalism. Let's go for it, man. Because if you're not going to do it, then that makes it that much easier on me. That's the thing I think about. It was just like, all the people out there who are not participating in this, only that makes it that much easier on me since I'm going to go ahead and participate in it. So yeah, go ahead and raise that idea of down with capitalism, screw capitalism. Yeah. The more you guys don't participate in it, the easier it is on me to participate in it. And then there's less of us who are going to be separating ourselves from the poor. Like, I don't know how else to describe it. It's just like, whether you like it or not, it's here. Might as well take advantage of it, right? I mean, even in China, they are trying to inflate a property bubble. Autocracy is not guaranteed of the fair economy with affordable housing. I don't know where fair came in. I don't understand this part. I mean, is it supposed to be fair? In what way? Like, I look out there and I look out in the wild and I see some crazy stuff that doesn't look fair to me. Have you ever seen like a cheetah chase down a gazelle and eat it? Doesn't seem very fair to the gazelle, but that's the way it is, right? Now, I understand that we're civilized people and that we should have a civilized society and that everything should be fair and equal and opportunity for everybody in the same way. Yeah, okay, good talk, right? Fun to talk about. Yeah, ain't happening, right? Because this is the wild. This is survival of the fittest, and if you're not participating in a way that says, hey, man, I'm going to outrun everybody else, because, this damn lion's on our ass. And better yet, you know what? I'm going to be the lion instead. And it's all mine. Right? All of it. I don't care how much of it is. I'm going to take it all. And I will divvy it out to who it is that I feel is fit. Now, again, we're civilized people and it shouldn't really be that way because that ain't really fair. But then again, I don't care. Right? I watch people out there all day long behaving in ways that is not fair. Right? You see this is a constitution. Do you realize that nobody within Congress who's supposed to be protecting this thing is acting fair towards it? Every single president who says that they are going to continue operation with the Federal Reserve is not fair. It's not fair. That's the reason why we have to now battle as hard as we can, is because they operate in a system that is not being fair. They're not fair to this. So, yeah, why are we trying to be fair? Why are we acting civil? Why are we not being complete 100% lions, taking it all for ourselves? Think about it. They're not acting fair. Why are we acting fair? This isn't fair. None of this is fair. It's not supposed to be, right? If it was fair, then we would all be happy and living in paradise. It's not that way, right? We have to fight for this, and it's not equal. Most people confuse corporations with capitalism. If you're wearing a shirt that you like and you paid for it willingly, congratulations, you were involved in capitalism. Good speech. Yeah, thank you guys. I agree. Okay, 19 minutes. Okay, we're not going to go very long. We're only going to do like another 10 minutes here, guys. So good questions or comments. Let's inside trading happens. Yep. Ask Pelosi. Ask the Fed. You remember, like right at the beginning of the pandemic, like a couple. I can't remember. Evans, was it Evans? I can't remember. I don't want to accuse anybody offhand without knowing their names exactly. But there was a couple of Fed officials who got fired for insider trading, and they were like, "Yeah, I know, but dang, it was so good. The money was so good, and we have to pay the fine and all that, and the cost of doing business. But see you guys. Hey, really appreciate that inside knowledge, but we're out, right? And we're gonna take our money and go." And I'm thinking, what? You don't go to jail? Like, okay, well, that's funny. You guys are in charge of monetary policy, absolutely knew exactly what was going to happen, and made buku bucks doing this, and nobody goes to jail, and you just pay some fines. This seems really not fair. Yeah, okay. Like, I'm going to sit around and pretend to be fair. Right? It's not. That's why I just don't like fair. Yeah. Anyway, moving on. Buying a shirt is capitalism, probably the dumbest thing I've heard. Well, Jesus, I mean, I would have to agree with the shirt analogy. All right, so Simon, do you think the Fed will eventually stop selling off their balance sheet? What would make them pause on that? Well, okay, so that's a good question actually, and this is probably one that is not really well thought about as far as what it is that has taken place within this particular form of monetary policy, because most people are just focused in on interest rates. But there's a whole other part of their monetary policy, and that is the abundance of money that is out there in the system. And that's where this balance sheet is really taking place as far as the unwinding of the balance sheet or the quantitative tightening that is out there. Now, at times, it does go the opposite direction in which that you see more money printing taking place. And, but for the most, right now, for the most part, we are experiencing quantitative tightening from the Federal Reserve, which means that they are allowing a certain portion of their balance sheet to roll off. Meaning that when there is a bond or a mortgage-backed security that has come due, that is money coming back to the Federal Reserve. Typically, the Federal Reserve would be known for rolling that back over into new debt, meaning that once the Treasury comes due and they get paid for it, they immediately go back out there and buy a Treasury again with it. Quantitative tightening is when they take that money, the Treasury comes due, and then they only buy back a little bit, meaning that they keep a bunch of it. And this is pulling money out of the system. This is pulling liquidity out of the system. So what this is the balance of how much money out there in the system, okay, is needed. Because the demand for liquidity is the issue that comes up when there's like credit markets starting to freeze. So a good example of a liquidity issue was because it happened just recently in the last few years, was September of 2019. Right. And so the banking system had on 2018, or I'm sorry, before September of 2019, they had plenty of liquidity within the banking system. But all of a sudden, boom, there was this corporate tax payment that had been made, which pulled a lot of money out of the banking system and sent it over to the Federal Reserve to an account called the Treasury General Account, right? So anyway, it's money that was sitting in the banking system, but because these corporations made this huge tax payment, it took that money out of the banking system and sent it over to basically pulled it out of the banking system. It's still in the banking system, considering it's just another account at the Federal Reserve, but still, it was no longer available to these banks. And so the liquidity all of a sudden was non-existent within this banking system because they did have reserves, but they were treasuries. The government was doing a lot of spending at the time. The primary dealers, which are the big banks, they go to auction, they buy these reserves, they put them on their balance sheet. A lot of times they are as good as cash, but they're not exactly cash. So cash is what they refer to as like the lubrication for the system. So although you can have a debt that represents cash that a lot of people will accept, at times you do need cash because the debt that is representing cash is not going to function for the purpose of needed. Basically, is to make the contracts do, right? Okay. So because this big payment was made and all of a sudden there was a depletion of cash within the banking system, all of a sudden the Federal Reserve had to fire up with what we referred to as non-QE QE, which was bringing liquidity to the banking system through the purchasing of those treasuries and the handing over cash. So this was a sort of like a form of quantitative easing, but not really. Quantitative easing is when they outright buy these treasuries, put them on the balance sheet, and hold them for an indefinite amount of time. Like, they don't really say on how long they're going to do it for. So it's a little bit of a different operation. So as of right now, what we are facing is the balance sheet runoff. And at some point, it will meet that teeter, right? So like right now, we have plenty of liquidity, and the teeter, it's like just like a teeter-totter, right? You got plenty, but then eventually it's going to find its equilibrium and tip. Where that happens and when it happens is not always exactly easy to find or see. Okay, and this is actually a really good question. How much time do I have? Okay, we're gonna end it with this one. How many people we got? 203 people. You guys are gonna be lucky to hear this final part, because this is actually gonna happen within some time. When that teeter happens, when that equilibrium is found, and then it tips the other way, where the demand for liquidity starts to rise because there's not enough of it in the banking system, the Fed has to then ease. Right? That's where the easing really needs to come in. The interest rate adjustments is a different tool. So we're just talking about the balance sheet right now. So at that point, that means that they are going to have to buy an asset and then print the money and put it out there. Now, the asset that they typically buy is the U.S. Treasury. But what do we already know about the U.S. Treasury and the government is that they're on an unsustainable debt path, meaning that if they were to go into this quantitative easing, right, and go out there and start buying these U.S. Treasuries, they are going to, it doesn't mean that the government is spending at that time, but they're going to give the opportunity for the government to go on an unsustainable debt issuance path. Okay, so I'm not trying to predict the future. I'm just saying that if they went into this quantitative easing, this right there, that quantitative easing would then give the government the ability to put themselves on an unsustainable debt burden. Right? They're already on an unsustainable debt path. They're not in unsustainable debt yet, not according to the Federal Reserve, but they're on that path. And so this is where I think the major concern comes in, is that if the Federal Reserve was to move out of quantitative tightening, where they're reeling in that liquidity, pulling in, the money, and they start moving back into a quantitative easing program, what are they going to buy? Right? Because all this is the reality of the situation. Like all the other stuff that they're talking about with Bitcoin and gold and all the other thing, okay, that's a great story, whatever. This is the situation that they will be facing, is how is it that they expand their balance sheet without screwing the government up? It's the biggest question. And so since I do research into the Federal Reserve and take it all the way back to that Ben Bernanke speech, in that speech, which is one of the only places, in fact, I think it's the only place I can find where Ben Bernanke is stated that they could buy the debt of a foreign nation, that it would expand the menu of assets that they could buy way beyond that of just the United States government treasuries. So if you can imagine just for a second that when the Federal Reserve is printing up money, see, a lot of people think they just print up money and throw it out there into the economy. It doesn't work like that. The Federal Reserve has to buy an asset. That asset that they buy off the secondary market, meaning they don't buy it directly from the Treasury. That would be monetizing the debt. They have to buy it from the secondary dealers, which is the big banks. So the Federal Reserve is printing up money and buying something that has already been purchased. This is important to understand. These assets are debt. It's debt of the United States government. And so they take that, they put it on their balance sheet as an asset. The government's debt is the Federal Reserve's asset. U.S. dollars are then printed up and put out there into circulation. This is how the Federal Reserve is operating. Can you imagine that U.S. Treasury debt being replaced with the debt of Germany? The debt of Japan? I mean, this is like mind-blowing to think. Like, how is it that another nation's debt then gets put onto the Federal Reserve's balance sheet and U.S. dollars getting issued for that? Like, to me, this idea is just mind-blowing to try and wrap your head around. Because then what is backing the dollar itself is the promise that this other nation is going to pay. because it's sitting on the balance sheet of the Federal Reserve, which has now got the Federal Reserve liabilities, which are Federal Reserve notes, which are US dollars, out there in circulation. Do you see how screwed up of a concept this is? And this is something that Ben Bernanke stated. They already have the legal authority to do this. They don't participate in this because this is typically like a dollar exchange issue that is held to the government, right, to deal in these type of foreign matters. However, they already got the legal authority to do it. And now I'm thinking, okay, if we have all the nations around the world get into a central bank digital currency, where you can track, trace, and even limit the transactions on where they are and where they go. Do you see how this central bank digital currency can then be used to not only keep money in certain areas, but then through smart contracts and all the other stuff to use the debt of another nation to then use as an asset to issue out dollars with? And again, none of it is cash, it's all digital. And so since you can keep currencies in some area, you can keep the debt promises in other. See, this is where I think we're really headed to. All the other stuff is it doesn't make sense to me when people are like, why don't we just go to a Bitcoin standard? And I'm like, okay, well, if we wanted or could use a limited currency for a world reserve currency, we already have the option. It's gold. It's not like you can reinvent the wheel with an economic force that already exists. Bitcoin is just a different form of that exact same thing. If you were sitting there going, man, I wish I had a way to get out of the dollar so I could have something that was independently owned where I didn't have to deal with anybody else out there. And you think about it, gold and crypto, Bitcoin are essentially the same thing when it comes to that ability. How you feel about it might be different. The efficiencies might be different. The storage of it, the handling of it, all these things might be different, but the underlying economic force of trying to get yourself out of the dollar into something that is independent and different, those two act exactly the same way. There is no difference between it. Your opinion of it might be different. But the underlying economic force of getting out of the dollar into something that is independent, these two act exactly the same way. So if the whole world wanted it, it's already there in gold. You don't need to reinvent it with cryptocurrencies. The only thing that cryptocurrencies does is makes it efficient and different in ability to transact with other people in ways that the physical doesn't allow you to do. All right. All right. What time is it? 3:30. Wow, look at all these comments. Okay. BTC is better than gold because of its transferability and fungibility. That comes from All Nighter Hider. I really appreciate the explanation, Simon. You're the man. One more question. Lots of laugh out loud. Okay. If the Fed suspects that a recession is on the horizon for whatever reason, but it has not materialized yet. Okay. If the Fed, is there more to this question? Okay. Would that cause them to increase their balance sheet? Okay. Okay, so I think this is a hypothetical situation that you're asking about, which, we can talk about hypotheticals all day long, like the what ifs. We could sit here and just write out a list of what ifs and just have 1,000 of them or something. Let's talk about the recession for the reality of what it is. All the indicators that we have ever thought about using to predict a recession have come and gone, and now we don't have to use them anymore because they're not working. I wonder why. It's because the Federal Reserve and the monetary policy no longer conducts itself in the way that those economic indicators would have predicted a recession. And I know that's hard to think about and imagine and internalize because this is the same thing that everybody has talked about using as far as the recession indicators. And they would have worked had you used them 10 years ago, right? But since we have changed monetary policy, it no longer is using those interest rate adjustments and all that other stuff to conduct monetary policy, but at the words, we are finding that these economic indicators don't work. Okay. And right, people are going to realize that it's coming down to their job owning being the main policy tool at some point, especially after these economic indicators that have been taught to every single economist student for the last, 35, 40 years are failing, right? They're going to have to come up with a new idea. Now, this is the problem that most people are facing when it comes to these economic indicators is because they work so well. They're saying, okay, any minute now, or right now, or and they're like, trying to say, okay, well, they're screwed up. They don't know. And it just becomes like this stumbling thing trying to figure out why the recession isn't here. All right, I have even a hard time trying to understand the description of it, of what these people are expecting out there. All right, so I'm going to take it back a little bit and go back to the recessionless recession, right? Because even recently, like Mike Zuber, I'm kind of going off here. Okay, Mike Zuber just recently did an interview with Claudia Sahm. It was like a month or two ago. Excellent interview. But even in that interview, she admitted that the Sahm rule no longer works. The Sahm rule was dead on every time, right? It was an employment indicator that once unemployment rose at a particular level, then it was going to predict a recession, and it worked every single time, right? Except for this time, right? The uninverted yield curve worked almost every single time, except for this time. Right? So all these economic indicators predicting a recession didn't work. Now, what did the uneducated economists say years ago about the recessionless recession? See, it's not the hypothetical situation that you're looking for, right? You're looking for the reality of the situation. And so when we take it back to the pandemic, there was something that was taking place within the economy that not a lot of people were thinking about and how that was going to impact the future. Think about how much unemployment fell, right? Think about all the jobs that were out there. So many jobs, right? Couldn't find anybody to do work at the wait staff, at the bars or the restaurants or anything else, right? All of a sudden, there was no employees anywhere. Everybody's gone. Nobody there to work. Now, this is a very unique situation that I don't know how many people put it in their head to then think about what would happen if somebody got laid off from their high-tech job. They got laid off from a $100,000 a year job or whatever, $150,000 a year job, and then all of a sudden they have to go and take a job because they got rent to pay, got a car payment, got stuff, got bills, you got life. So they have to take a job, and they don't have that tech job anymore because all these zombie corporations are failing. Where did they go? They went to work at the restaurants. They went to work at the wait staff, going to work at the hotels. Right? So all the jobs went to the service industry. And when they did that, they didn't show up as unemployed. Now, I granted, it's not a great job, and it's probably hurting them, and it's probably not great, for them to, participate in the economy with, but they're not showing up as unemployed, right? Because, as long as you have a job, it's a job, and you're not unemployed. So this is one of the reasons why we're not seeing the rise in unemployment, which would be an indicator of a recession. And now, typically, if you have a rise in unemployment, it's due to corporations failing. Well, we are finding corporations failing. There's bankruptcies and all kinds of, issues taking place within the corporate industries. And to think about that for just a minute, again, during the pandemic, there was a huge drop in interest rates. Many corporations gorged on this incredibly cheap interest rate, right? Sold bonds like crazy. They loaded up on cash and they sat on cash, and they're now getting through a lot of this. The zombie corporations who have to take out ever-increasing amounts of debt in order to function, they failed when the interest rates went up as they can no longer function. So this is the recessionless recession that we're facing. Even though what we would have anticipated coming from the numbers out there, like the Sahm rule and the unemployment rising from that really low number up to what isn't that bad, right? That would have typically been a sign of a recession, the uninverted yield curve, right? This is stuff that if you really understood it, would have been absolutely nailing the economy 10 years ago. See, that's the thing. This is why I keep trying to get people to listen to the damn credible threat theory, is because the people who really understand what it is that I am just saying, 10 years ago, they would have been nailing it, right? This is like, because that's the way that the Federal Reserve had conducted themselves. Prior to the Great Financial, it's even longer ago. I say 10 years ago, it was more like 15 now, right? 15, 20 years ago. But that's how the Federal Reserve had operated until they hit the lower bound of zero. After they hit the lower bound of zero, after that, it wasn't the same game anymore. And all those economic indicators are basically worthless. I mean, they're good to watch because they kind of give you a good understanding of what it is that's happening out there. But to understand what has taken place within the economy and how monetary policy is affecting the economy, which is your economy. Remember that it's you and how you position yourself within it. Are you heavily in debt with a bunch of cars and a house payment and, credit cards and stuff like that? Or are you loading up on, dividend paying assets like, businesses and rental properties or whatever? Okay, so everybody has a different economy that they're operating in. And then understanding that the information that most people are delivering is good information from the old way. All right? And understanding that is actually very important, because if you didn't understand that, then you wouldn't be able to understand the credible threat theory that goes with it, because it's the communication about that stuff that is now guiding the markets. See, again, like, this is something that I've been trying to explain. I don't know how to communicate it out there to give people that understanding, that belief, that aha moment, that they realize that everything that they know about the economy is not working, but what they do know about it and the communication about that does. Right? So it's not like, everything you know is worthless. That's not it. Everything you know is very important, especially you have to know the history of how the Federal Reserve operated, how it is that they got themselves to this position, and then now what it is that they are doing in order to conduct themselves. And then once you see it in this fashion, you can then understand how it is that they are communicating in a way that then guides the markets, because the actual interest rate adjustment doesn't do it anymore. The indicators don't work anymore. Right? And again, right, once you see it, it becomes a lot more clear. All right, I have pushed this way longer than I wanted to, guys, but this is a lot of fun. I think we're really breaking this stuff down good. 42 minutes into this. It's probably time to short Michael Saylor's company as well. All right, Benny's up in here. It's right up there with dreaming while creaming. Yeah, couldn't expect nothing less. All right. Dominic, do you know if Janet Yellen ever said that there would never be another financial crisis again? Is it because she understood the Fed has tools at their disposal we know nothing about? Thoughts? Well, it's kind of, yeah, she said that we would never go into another financial crisis. And so a lot of times I think about, like, because I used to kind of relate financial crisis and recession as the same thing, and they're not, right? They're two very different things. So it's very well likely that we could go into recessions. But as far as the financial crisis and never going into another one again, I don't know how you really could go into a financial crisis if you can buy the assets of the entire globe and print up as much money as you want. Now, the problem with this is that you can't print up as much money as you want and then expect that money to hold value. However, you can print up a bunch of money, especially if you have the world who has written debts that are due in dollars that are far exceeding the available dollars to do it, to pay the debt. So that gives you the ability to really write a lot of debt, right? I mean, or print out a lot of dollars, considering that how much people out there are going to continue to write debts that are due in dollars. Even though you have BRICS nations and all these other people, take a look at every single one of the BRICS nations, besides maybe Russia, write debts that are due in dollars, especially China. All right, China, India, all those people, they write debts that are due in dollars. That means over the next 10 years, Brazil is going to have to come up with dollars to pay them debts. And they can't just go and default on them because they're not necessarily defaulting on the United States or the investors or the governments or anybody else that has anything to do with the United States. Those debts could have gone to anybody in the world. Right? Now, where they have gone, I'm not exactly sure because I didn't go and research where exactly all the US dollar denominated debt that Brazil has issued has gone to. But I know that the people who have purchased that US dollar denominated debt from Brazil is probably going to be asking for dollars back. Right? And won't accept anything else. I mean, if they don't have any other choice because they're going to default, then they may have to accept something else. But for the most part, if they issued it out, paid for it in dollars, they're going to want to be paid back in dollars. All right, $4.99 from Mr. Dominic. Thank you so much, sir. $4.99. Thank you again for answering all my questions, man. I appreciate you and this community. Yeah, you bet, man. Well, I think we got the best community here on YouTube. I really do. Like, I think we have a group of guys here who are not only knowledgeable, they're like professionals, they're young, they're, retired. We have it all here. And so to think about like how it is that a lot of other channels conduct themselves as far as like, hey, listen to me and I'm going to tell you how to make a bunch of money. I don't know how to do that, man. I'm trying to figure out how to make a bunch of money for myself, and not everybody's going to be able to do it the way I did it. So I encourage everybody to figure out their own way of doing it. And the way that you do that is to understand what's going on within the economy, your economy, and how it is that you can become a capitalist or landlord or, property owner. These are the only two ways. Like a business ownership is like awesome way to make money, right? Like if you're going to make money, be self-employed and own a business or something of that nature. But if you want to separate yourself from the poor, you got to become a capitalist or property owner because they're the only two that live independently of the state. Everybody else is reliant. So again, like this is the stuff that I try to figure out here, and hopefully other people are, listening and sharing their ideas and figuring it out for themselves as well. Because again, if you're 18 years old trying to figure it all out as far as where you're going to go with your life, it's going to be a very different thing that you're going to do than the guy who's 80 years old trying to figure out how to hold on to the rest of his retirement, All right. Benny, seriously, one for you, Simon. Do you think the DeepSeek situation is just a convenient excuse for the market to crash as it has? Well, I don't know. I mean, I had never gotten to the pump and dump schemes to begin with. So, yeah, I mean, I can see where, like, there's probably a lot of manipulation. It was the biggest, what? Biggest fall in market cap for a single company in U.S. history, or in something like U.S. history. I didn't even godly amount, $600 billion drop in market cap or something like that. It was like, oh my God. I was like, how does that even happen, right? So, I mean, I know how it happens, but it's just like, it's mind blowing to think that that happened. Do I think it's a cover up or manipulation or something of that nature? I wouldn't touch any of that stuff. Like, I've already played the silver manipulation game and got burned big time. So I learned my lesson about like things that get all hyped up on news. Like, I'm not into it. I mean, if I even hear other people talking about it, like out there in a conversation, I am most likely not interested inside of it. Like, especially if it's new, like Bitcoin, everybody's talking about now. But that's something that, I've been loading up on for so long. And there's plenty of people out there who are just diehards into some of these pump and dump schemes and thinking that they're going to be making a bunch of money or crashing a bunch of companies or something of that nature. I don't get into it. Like, to me, it's just like it's not worth my time to even think about it or participate in any of that stuff. Can somebody make a bunch of money at it? Sure. Yeah. I mean, pump and dump schemes are money makers, or else people wouldn't do it. But I'm not into it. Like, I don't waste my time with it. I move on to other things. Agreed, Jesus, but we wouldn't have any big clients in the scenario like that. Bunch of tribes everywhere that probably would compete for those resources. Oh, what is Jesus saying? Huh. Oh, I missed his comment. All right. All right. Let's do one more comment here and then we're going to go. All right. So, what can I actually do with my very valuable gold exactly? Well, why did you buy it? Right? What meaning did you give behind the purchase of it? And you're asking me what you're going to do with it. So, you want to change the meaning of your original purchase. Why did you do that? Why did you go and put the money on that thing? Was it because you thought that it was going to go up in value? Was it because you thought that the government was going to fail? Did you want to be outside of a third party claim? Like, there's so many reasons for making that purchase. And now, if you bought it with an intent, like, I want this to buy me a house, all right? Well, that's a particular investment that you're doing, right? You put your money towards gold and then you expect it to go up so much that you can now buy a house with it. And, if that's what your intent is to it, then I don't know why you're asking. To me, I've said it so many times, right? I buy precious metals. Now, originally I bought it because I thought I was going to go to the moon and I was going to be super wealthy off of it, but I changed my mind. Right? I don't have it for that same reason anymore. My idea about having gold and silver is so that I can be outside of a third party claim. That if anything was to happen with the banking industry, anything happened with the stock market, anything happened with my job, anything that happens with, whatever out there, it doesn't have anything to do with any of that stuff. It doesn't have anything to do with anything outside of me, period. Nothing. Which is great, right? There's not a whole lot of items out there that are like that. So as an insurance policy, it seems like it's a wonderful tool. And that's why I buy it. I buy it for the insurance policy, and I don't really think about it doing anything else. I don't think about it buying me a house. I don't think about how much it's going to be worth someday. And I don't think that, I'm going to be able to have some kind of wonderful life because of it. I do hope at some point that I can then give it to my family, right? Boys, whatever, when they grow up, leave it to them. If it goes to $1,000 an ounce for silver, yeah, I'd probably sell some, right? I mean, I'd probably sell some at $1,000 an ounce. That'd probably be something I would do. But again, I have very little expectations of that. So what do you do with your gold? I don't know. That's what I do with mine. Again, show me your portfolio, bro. What are you hiding from us? Millions, billions, dozens. I've told you guys exactly everything that I've ever done, man. Yeah. I mean, I don't know. Are you talking to me? I'm not asking him for advice. I'm giving it. Must be too dark in the nice car. I don't have a nice car. Okay. I heard that Russian ruble was a good place to put your money at since it's doing so well. Oh, wait a minute. That was Steve Van Meter again? Did he really say that? No, did he? I don't know. I haven't listened to Steve in a long time. All right. Even the doping and coking. All right. That's all like saying fighting won't be gaslighting us with nonsense. All right. You guys are awesome. Thank you for hanging out for the hour. Again, I was going to try and keep it a half an hour because I'm going to go in there and eat, but it was so much fun discussing some of these things, especially breaking down like what it is that the Federal Reserve is going to do going into the future. I am just sitting around waiting for the day that they actually make that announcement that they're going to be buying that of a foreign debt. And, knowing that they already have that authority, Ben Bernanke talking about it over 20 years ago, the United States government on an unsustainable debt path, it's just like, what are they going to do? Like, I mean, it seems like that's the next step is to move into that sort of asset purchases. And when they do that, it's going to be a whole different experience when it comes to how it is that the monetary policy is being conducted. Because you think about it, like now they got the purchasing. All right. Anyway, if you guys want to go and read that for yourself, it's actually November of 2002. Deflation, How to Prevent It from Ever Occurring Here in the United States. Ben Bernanke's speech. And you can go and read that. And it's probably, I'm thinking it's about 3/4 of the way through that speech. And that's where the gold machine, the credible threat theory, the lower bound, once they hit the lower bound, that monetary policy has come to an end, and he says that's okay. We can just use our words for monetary policy as opposed to actions. And it's all in that speech 20 years ago, right? 20 plus years ago. So if you want to go read it for yourself, Ben Bernanke's 2002 or November of 2002 Deflation, How to Prevent It from Ever Occurring in the United States. Uneducated Economist. You guys let me know.